Hello, welcome back to Let's Talk Title with Emerald Coast Title Services. I'm President and host Dion Moniz, and we have our Director of Operations and co-host Ashley Bowen. Say hello.
Hi, welcome.
So today, well, what is this, episode number 19?
19.
We're almost of legal drinking age with our podcast.
Yep.
So a big party at episode 21, I guess. We'll have
2
some
months.
alcohol involved.
February.
Yes, exactly.
We'll get the Grand Marnier ready.
It's been a good ride so far. We appreciate all 10 of our listeners watching us. All right, so today we're going to talk about FIRPTA. What the heck is FIRPTA?
FIRPTA is the Foreign Investment and Real Property Tax Act. So it is for foreign people who've invested in real estate in the United States of America. When they go to sell, they have to pay taxes because they don't get to pay they don't pay regular income taxes, and so they have to pay their capital gains taxes, and this is the way that the IRS is going to get their money.
Yeah, exactly. So, and the standard withholding is 15% of the purchase price.
Yes.
And the intent,
gross amount.
The gross amount, exactly. And the intent behind that, like you said, is because it's a foreign person, so the IRS is going to make sure that they pay the proper taxes on that sale. What FIRPTA allows is for adjustments to be made that we'll get into in a little bit later. So it's not necessarily going to be 15% by the end, but at least in the beginning it's 15%.
That's the most amount that they're going to ask for. And the IRS actually puts the burden on the buyer to remit those funds. It's the seller's tax, but they put the burden on the buyer, which is something that a lot of people don't really understand. The reason that they do that is because the seller is going to be somewhere in the world and the Uncle Sam doesn't know how to track him down. He does know how to track down that buyer. So that's why they put the burden on the buyer.
Uncle Sam's going to get his money.
Yes.
So he puts his hooks into the buyer.
So when you're on the listing side and you have a foreign person, a foreign seller, you need to make sure they understand that 15% of that money is going to get withheld or remitted to the IRS. And if you are a buyer's agent, you need to make sure that the title company knows that we have a foreign seller because your client is the one who would get taxed.
Right.
If the title company doesn't collect.
And we've learned through some of our seminars with agents that not all title companies actually handle this, which is kind of odd, but we as a title company do. So even though it is on the burden of the buyer, we take on that responsibility for the buyer. So as soon as we find out that there's a foreign seller involved, we'll actually start the motions with the seller and the seller's agent to do everything that's required under FIRPTA, and we will hold that money in our escrow account and make sure it's properly dispersed to Uncle Sam at the end.
Yes.
So we will take care of that for the transaction.
So first, let's talk about exceptions, I think.
Well, first there's 2 factors to determine whether withholding is necessary. And one is if it's a foreign person, and then 2 is whether an exception applies. So let's first talk about what constitutes a foreign person. And the 4 main factors for whether you're a foreign person is you're a non-resident alien, you're a foreign corporation, which is an LLC or partnership that's domiciled outside the United States. Actually, in Florida, an out-of-state LLC is considered a foreign LLC, but they're talking about companies.
Actually foreign.
Yes. Actually
not
foreign.
In the United States.
A foreign trust also qualifies as a foreign person. And then if it's a single member LLC that's actually in Florida, but the single member, the sole member, is a foreign person. So those are the 4.
But there is maybe a come around to that. If you have a single member LLC with a foreign person as the sole member, then you could add a U.S. resident to your LLC as a member, and then FIRPTA wouldn't apply at that point if it's a Florida LLC with 1 resident of the United States and 1 foreign person.
Right. Yeah. So if it's a multi-member LLC and it's at least one of those members is a U.S. resident, then this doesn't apply. If it's a single member LLC and the only member is a foreign person, then it applies. So
okay.
Yeah,
that might be a way to get around it.
Absolutely.
Worth a shot.
And so let's talk real quick on what constitutes a non-resident alien. So you can be a resident alien if you have your green card, right?
Or meet the substantial presence test, which states that you must be physically present at least 31 days during the current year and 183 days in the previous 3 years. So you have to live here a majority amount of the time.
Right. So on the seller side, if you're a person you believe is foreign, if they have their green card, they're good. But even if they don't have their green card, let me say that right, there's still a possibility that they could meet the test and qualify as a resident alien, where FIRPTA will not apply. So that's something to talk to us about. And
we can help figure out if FIRPTA is going to apply or not based on everybody's individual tax liabilities and needs. Like, do they pay taxes? Do they have a tax ID number? Typically, if they do, they pay taxes, and this may or may not apply, but we need to look at each case individually.
Right. And so one of the things we do on the closing side is we have our affidavit that sets out they're not a foreign, they're a U.S. resident or whatever, and it goes through the criteria. And as long as that's executed by the seller and we believe it to be truthful, then that
right. But we ask them right at the very beginning when we get a contract. That's the first question that we ask is to a seller: is, are you a U.S. citizen? If the answer is no, then we automatically have red flags, and we know that we need to ask some questions.
Right.
Also, FIRPTA does not apply. Another exception is if the property is less than $300,000 and it is going to be the primary residence of the buyer, then we don't have to withhold anything. If the purchase price is between $300,000 and $1 million and it's going to be the buyer's primary residence, then we only have to withhold 10%.
Right. So that's a perfect segue into our exceptions. So now if you have a foreign person, then you move on to whether there's an exception that applies, and that will kick out FIRPTA. So the first exception is the personal use exception, which you just talked about.
And if that's the case, we find out, I just this week had a property close. It was subject to FIRPTA. It was between $300,000 and $400,000 condo. My first question to the buyer was, is this going to be your primary residence? Hoping that it would be, so that we could either reduce the amount of withholding or remove it altogether. But they weren't. It was primary. But if the buyer told us that it was going to be their primary residence, then we have a form that we would have the buyer sign saying, this is going to be my primary residence, and so it's not subject to FIRPTA. And that's something that we will keep in our file for 7 years, and we will pass it along to the realtors so that they can keep it in their file for 7 years. Just CYA.
Okay, so the cool thing about the personal use exception is it doesn't have to be the buyer that's going to use it for the personal residence. It can be members of the family.
Yes, this form says, I have definite plans that a member of my family, to include brothers, sisters, ancestors, descendants, or spouse, or I, will reside on the property for at least 50% of the number of days in the year.
Yep. So if any of that applies, and they sign the affidavit, then we're good to go. So again, if it's personal use and the purchase price is less than $300,000,
there's zero withholding.
Zero withholding. If it's over 300 and under or up to $1 million, 10%. Yep. So keep that in mind. All right.
Yes.
Next up is so the general procedure for when the application has to be filed, how long the IRS has, and then how long we have to pay.
Right. So I've had it happen both ways, where I'll ask the seller, do you want to fill out an application to get the amount of withholding reduced? Do you think that have you already paid enough taxes that you're not going to have to pay the full 15%? I've had where they said we shouldn't have to pay the whole thing. So right at the beginning of the process, I fill out an application, send it to the IRS. It has to be sent on or before the closing date. It can't be sent after the closing date.
Right.
The IRS then has 90 days to act on the application, to send me either an invoice telling me how much that we need to remit, or telling me that we owe the whole amount, and then we submit that to the IRS.
And that's not appealable. Whatever that comes out as, that's what we have to go by.
That's what it's going to be.
Yeah.
So we were withholding the 15%. If the IRS says you're only going to owe us 12%, we'll submit that 12% to the IRS, and the remaining 3% goes to the seller, just like any other escrow holdback that we would do.
And we have 20 days from when we get the IRS's determination
that we
to
have
disperse.
To send it.
Otherwise, we're on the hook for the whole amount.
It's true.
So, Ashley, have you ever had a situation where the IRS did not respond within 90 days?
I have not yet.
Okay.
But we have one coming up on, I think we're probably at about 60 days right now. So within the next 30 days, I'll let you know if they respond or not.
We might have to update our audience in the next podcast episode.
Yes. And if they don't respond, then we're going to submit the whole 15%.
Yeah, I think it's a default that if we don't hear anything within the 90 days, we just have to disperse the full amount. So hopefully the IRS
I'll let you know.
Responds timely.
Keep you updated.
So again, just to summarize for our audience, the reason for this application, and a lot of times the sellers will actually use their CPA to handle this because the CPA is already handling all their tax stuff.
Well, and if the CPA knows that they're paying taxes on different businesses that they have or other properties that they've sold, I think that there's probably a cap as to how much they can tax the seller in a year, and so that's why we have the application. Some people are going to owe less because they paid more somewhere else, and that's why we do the application.
Right.
Because those that don't pay any taxes, the IRS is going to take its whole 15%.
Yeah, exactly. And it depends on the tax basis in the property, which is where the CPA comes in to explain the tax basis is different. So again, we start at 15%, and hopefully through the CPA, the seller can get it whittled down to something lower, and then we wait for the IRS to tell us the actual number that we're going to have to pay, and that's what we have to pay, and we have to pay that within 20 days. So what happens, Ashley, if you have joint sellers for a property? So let's say husband and wife, and the husband is a foreign person and the wife is a U.S. citizen.
Where do they file taxes? Do they file jointly as a married couple, as husband and wife?
Well, actually, it doesn't matter. So under the federal law, if you have joint sellers and let's say there's two sellers, one's a foreign person, one's a U.S. citizen, split it in half. It's prorated. So instead of 15%, it's basically 7.5%, right?
From the foreign partner's proceeds.
Yes.
So we're withholding 15% from 50%.
You're withholding half of what you normally would. If there's 3 sellers and only one is a foreign person, it's a third.
Okay.
If there's 2 that are foreign persons, it's 2/3. So it's prorated based on the number of foreign people in the transaction versus the total number of sellers that are conveying the property. All right. Well, actually, I think we've covered everything for today. So that's going to wrap it up for this episode.
We did good. So we're going to put a copy of our cheat sheet here on the screen, as well as in a link below, so you can download it for your records. A nice little cheat sheet.
Yep. Smash that like button and
drop us some suggestions of more topics if you want it to. That you want us to discuss?
Yes, we'd love to hear more stuff that you want to be educated on, real estate topics, title, law, any of that good stuff. And if you'd like to join us,
you want to come be our guest?
Yes, we'd love you. We'd love to have you. So it's not just me and Ashley every time. So in the meantime, everyone, I hope you have a Merry Christmas and a Happy New Year. This is probably going to air after Christmas, so I hope you had a good Christmas and a Happy New Year. And we'll see you next time.
Yep, we're looking forward to a great 2022.
Yeah. Take care. We'll see you.
Bye. Thank you.